Right, before all of that, as the Bank of England warns that consumer credit is growing by more than 10% a year, with the average Brit owing £309,000 over their lifetime, it's never been more important to check and, if possible, cut your debt.
Well, from credit cards and personal loans and mortgages, Martin Lewis is here to help. So why is this such a bad thing, then?
Well, look, we had a report on last Tuesday, from the Bank of England. And the Bank of England, they're not politicians. They don't go out making grand statements. They make subtle statements that you have to read into. And what it looks like they're saying here is they are very worried, especially about unsecured borrowing, so that's credit cards and loans, but also mortgages that's going on out there, that we're borrowing too much. And, of course, that has a bad effect on the economy if it gets too big, as it did in the credit crunch.
Yes, I was going to say, this is what trashed the economy in 2008.
It's exactly what trashed the economy. So what they've said is they're going to look at the next couple of reports that come out on the amount of borrowing and then look whether there will be action. Reading between the lines, I think that this means it's plausible, possible, but I'm not saying it will happen, that over the next year we might see regulations that tighten up the credit scoring on credit cards and on loans and on store cards, which means they're going to be more difficult to get, and the affordability criteria on mortgages, which means they'll be more difficult to get. Now, I'm not here to tell anybody to go out and get new borrowing now, but one of the problems when those criteria tightened up is people who have existing borrowing, who already owe money, when you apply for new products to cut the cost of what you already owe, they are more difficult to get. So that's my clarion call today. We are at all-time record lows right across the board, or near all-time record lows, on mortgages, on credit cards and loans. So if you've got those debts right now, try soon to see if you can cut the cost and get them cheaper. Because, of course, if you do cut the cost and there's less interest, more of your repayments clear the actual debt, which means you're debt-free quicker. Because it may be more difficult to do in 6 months to a year's time. This is a bit of, crystal ball. I'm not saying it will be, but I think it's perfectly plausible it could be, even if interest rates don't go up. So now's the time. Just go through and analyse all your debts.
So what do you do? So I'm going to go to a comparison site?
Well, let's do mortgages, because it's product by product. If we go through mortgages, the thing to remember right now, you can get a 1-year fixed mortgage for just over 1%, a 2-year fixed mortgage for just over 1%, a 5-year fixed for under 2%. Now, many people are on their standard variable rate at 4 or 5%. Now, the thing to understand is for every £100,000 of mortgage you get, a 1 percentage point cut is £80 a month saved. That's big money. So looking now, just to encourage you, somebody got in touch with me on there, Miranda, followed your remortgage help, now able to repay my mortgage 10 years earlier and save £5,500 in repayments. Thank you. What do you do? Get onto a comparison site to find a benchmark, go across the market. Make sure your credit score's as good as possible, and if it's not there now, you need to start working on that. You can go and get on a search engine and find out how to do that in various ways. Make sure that in the few months before you apply to a mortgage, you go frugal because of these affordability tests that look at what you're spending. Have you got room to get a new mortgage? And they do that even if you're not borrowing any more, even if you look... It's ridiculous, this, and I've campaigned on this for years, and I'm not getting anywhere, unfortunately. I hope to soon. When they do you're remortgaging, so trying to get a new deal, let's say you're on 5% and you want a 3% mortgage, they do an affordability check to see if you can afford it at 6%. And sometimes people fail. So what they're told is you're not borrowing anymore, nothing's changed, you're on 5%, but you can't afford a cheaper mortgage.
That's crazy.
Crackers, absolutely bonkers. I've banged my head, I've spoken to the Treasury, I've spoken to the FCA, I've just put it to the Bank of England themselves, actually. But they all say it's all pointing at somebody else.
OK.
They're pointing at the EU points back here. Anyway, we won't worry about that one. And talk to a mortgage broker. Mortgage brokers have information so that they can help filter you through to the mortgages who are most likely to accept you. And that information isn't available to the general public. Find a good mortgage broker. Do not pay them unless they get you a deal. Some of them are fees-free. More details on all of this on the website.